Hello everyone, welcome to yet another edition of Banking Central. I am Dinesh Unnikrishnan. Today I have with me a very special guest, a senior banker who has been one of the growth pillars of Kotak Mahindra Bank over 3 decades. One of the top leaders of the bank who has built many key verticals, particularly the consumer banking business over decades. Let's welcome Shanti Ekambaram, whole-time director, Kotak Mahindra Bank. Shanti ma'am, thank you for giving me time. Thank you for joining the show.
Thanks, Dinesh, for inviting me.
Yeah. I wanted to, begin with maybe the obvious question. I was just thinking, when you joined about, 30, 35 years ago in banking, probably that was a time when, please correct me if I'm wrong, not too many women joined bank, considered banking as a career. So how did you choose to, start as a banker? You're a commerce graduate and you're also a chartered accountant. So was it you or your family?
So I'd say that it was by accident. So I finished my CA final exams, and I think it was November 86 or so, if I'm not mistaken. And I was waiting for the results when a friend of mine got a call from Bank of Nova Scotia, a small Canadian bank.
Yeah.
He had applied 6 months ago and he got a job in ICICI already. So he says, why don't you go for an interview? You have to start practicing for interviews. Here I was enjoying my break after hard exams and I went in for the interview. It was such a wonderful interview. The CEO was a Canadian and we had such a great a meeting that at the end of it, he said, just why don't you join the bank? I said, I'm waiting for my results. He said, it's okay. If you fail, we'll see what to do, but we'll give you another chance. And that's how I came into the Bank of Nova Scotia. And I was there for about 4 odd years or so. And about 2.5 years into Bank of Nova Scotia, I met this young man called Uday Kotak, who was going around meeting bankers for bill discounting. And, used to talk to him almost every day and acquired Kotak as a client for the bank and really grew the relationship. So at the end of about 4.5 years, when Bank of Nova Scotia was small and I wanted to go to a bigger place, and I had an offer from Deutsche and Standard Chartered. And I went to ask Uday for advice because he was meeting all the banks.
Yeah.
That's when he said, why don't you join me? And I knew that they didn't have an office. They started in a Surrey building. But he said, we are building an office at Narimah Bhavan. Immediately he took me there, showed. And for about 4 months, we were talking and I was thinking. And finally, I decided to join. So I think that destiny, I can't say anything else. I wanted to be in financial services. I was very clear from my 10th standard when we had an aptitude, but I had no idea what it meant. And so my very first interview was by accident. My second joining Kotak was also a relationship-based call. And I started by bill discounting. And, in Kotak, the rest is history. I'm happy to answer.
Right.
So I'd say quite by accident, but financial services was at the back of my mind.
Right.
But banking specific was destiny.
Can you recall those early days in Kotak? How was it like? Because Kotak was a very, not a well-known company at this point, obviously. It was a...
Yeah. So when I joined to run the bill discounting desk. And, in about 2 years after I joined, we really had a leadership market share. We basically were discounting bills from vendors and then selling them to banks because banks didn't have that kind of a distribution network and making a margin in between. Right. It was very exciting. Today, when you look at a bank setup, you have a sales, you have credit, you have operations, you have treasury. Everything was one. So I was running right from end to end. And literally, it was like a trading business model. It was a wonderful model. We had very little capital, very little money. But you made sure that the processes were so good and completely controlled that, you made money. So it was very exciting. It was a one office and all of us used to be there. And at the end of the day, we'll all sit around together. I still remember and look at the ledger and say, how much money did you make today? So we would not go home and Uday used to be sitting, we all used to be eating sev puri and say, how much money did you make today? That's where we started. And pretty soon RBI closed the door saying that banks can't rediscount from NBFCs. And then I moved on to capital markets, the Goldman Sachs relationship. Right. So I think early days were about discovering what we could do. We were hungry for growth. We were hungry for looking for new opportunities. And from just bill discounting, then we moved into the capital market relationship with Goldman Sachs, capital market, relationship with Ford. We entered mutual funds, insurance, and one by one, and finally banking in 2003. when we launched the bank. We got the license in 2002. So that's really how it was. Small group, very entrepreneurial, very focused on obviously profitability, capital, liquidity, those are the big buzzwords today, but that was really by everyday working, and a wonderfully energetic and buzzing. In fact, I miss those days.
So 30 years of basically a long time. So when you look back, if I may ask you that, what is the most critical challenge probably you would have faced in those 30 years in your career as you build?
I think every time we scaled and every time we got into new areas, I think we started realizing that we needed to operate differently. Like I said, we were used to being entrepreneurs, taking decisions and, process, regulation, technology. Slowly, I think you started scaling. In almost every business we entered, we were the last entrant. So when we entered car finance, they were already the top 3. And our aim was very clear. You must get into the top 5, and then aim for the top 3 in any business that you enter. Right. That's always been the mantra with the group. So then it's really about how do you think differently? And you have to think differently if you're the last in the line and trying to come up with it. Right. So the challenge was really scale. Getting in talent. And I remember in the early days of Kotak, mid-90s, I used to go to the IIMs, campuses, sell Kotak, try to hire good people, and some of them are our leaders today, right? So we were involved in the talents that we used to pick. We were involved in everything, and the challenge of scale, challenge of trying to get a market share, challenge of trying obviously to keep up with the, growth, profitability. And, each year it will be revitalizing actually.
So being a woman, ma'am, I've been interviewing so many bankers over the last few years. So we don't have, the one reality is that in India, we don't have too many women at the top, except maybe a handful of them. So typically banking is considered as a male dominated industry, at least that is the perception generally. I'm not judging it. So was it tough for you to balance, to rise through the ranks, in Kotak?
So
how was your experience?
The number one thing, I can talk about myself.
Yeah.
I never let myself think I'm gender. In the sense, I think in any workplace, and especially if you want to really do well, you've got to forget that you are a different gender, right? You've got to focus on competencies and what it takes for the job, right? You have to deliver and you have to do what it takes for the job. Right. So one of the few things is and maybe I was lucky, this organization never made me feel that I was a woman and thus different. I was one of them, right? And when we grew, when we sat, when we discussed, when we debated, when we worked long hours, we really, pushed hard to be successful. There was I did not even think I was a woman. For example, I still remember the IPO of Fuse Software, which completely changed capital markets and catapulted Kotak to the first. We finalized the deal at 4 o'clock and broke champagne at 4:30. I was sitting there all night with the team. Right. When there was a pitch to go to California, I flew 21 hours and came back to India. So I think very first and most Important, the organization has to be conducive. And you have to get it out of your mind that you are a different gender and you got to focus on competencies. Second, to be practical from a women's perspective, women don't have it easy. To juggle the various roles that a woman plays, many of them give up. So it's not just about the industry being dominated by men. I think it is also about women wanting to succeed, wanting to, move up and being able to manage. For that, you need a social fabric, a family fabric, etc. So women don't have it easy. Yeah. And that's something that's nothing to do with gender. It is to do about the way, society is and the fabric of society.
Yeah. One of your, highlights, in my opinion, over the last 3 years, the way you built the consumer banking business as well. If I remember correct, between 2014 to 2023, you were, massively building, savings accounts. You were going out. Till that time, public sector banks was, heavily dominating, the banking space. And Kotak being, despite the constraints of, physical presence in metros, still you managed to grow that base very quickly. Can you elaborate? What was the strategy?
So first and foremost, when I moved or took charge of the consumer bank in 2014 May,
Yeah.
Till then, I was a wholesale banker
Yes.
all my life.
Yes.
For almost, I think, 23 years or so. I'm now 32 years with Kotak. And if I take the last 10 years, so about 22, 23 years was a wholesale banker and didn't know anything
Yes.
about retail. I think that helps. If you don't have any baggage, right, you look at everything new. Second, that was about the time when digital was just making its presence felt.
Right.
And we launched our app in December of 13, just before I joined. Very basic, very rudimentary. That was another second factor. And the third factor was really, I joined in May, and in November 14, the merger with ING Vysya was announced, which doubled our network. So I'd say that consumer is a fascinating business.
Yeah.
I still say you can conduct 100 experiments at the same time. Some will work, some won't work, and you can just put it across.
Right.
I think Kotak had some very unique position. Firstly, we have 6%. And we use that very effectively to grow our current and our savings proposition. See, in any bank, CASA is key.
Yes.
And savings is core and stable. So it is all about your strategy on distribution, on client focus, on the value proposition you offer, and the platforms that you deliver. So through a combination of our app, our network, our doubling of network through ING Vysya, our 6%, and then 811 from 2017 post demonetization, all of that helped us transform the way we looked at the consumer and the way we built the consumer banking business. In fact, our assets business came much later. We were so focused on liabilities because liabilities are really the assets of a bank. Let's be very clear about that. And then we grew our customer base. We started cross-selling. We moved more and more into technology. And as we stand today, we are undergoing a transformation of a completely different kind, which I'll talk about.
Right. So specifically, I want to ask, how do you look at of course, it's a happening time in Kotak, so a lot of developments. How do you see the position of Kotak at this point? What is your assessment? Because the industry landscape has changed over the last 10 years drastically. We are seeing, several different types of lenders coming in, some digital lenders, small finance banks, payments banks. So for legacy banks, traditional banks like Kotak, the portfolios in consumer business and in corporate level that you have built over the decades, are these facing any challenges at this point for Kotak? How do you assess the current situation in Kotak?
Firstly, India has massive opportunity. 130 or 40 billion people, or 140 crore people. And if you look at the penetration of financial services, any product, whether it's a credit card, whether it is a loan, whether it's an insurance, whether it's a SIP, it's very low. Okay. Second, the world has changed post-COVID. What am I saying? I think we saw the beginnings of technology and technology platforms just before COVID. But during and after COVID, India adapted to the technology, particularly the mobile.
Right.
People were shopping sitting at home. People were making payments for everything sitting at home. They were ordering food on the app. Everything they were doing on the app. If you look at the length and breadth of India today, thanks to telecom, thanks to Aadhaar, thanks to the identity, the digital adoption has just multiplied.
Right.
And customer preferences changed. They were using an Amazon, a Google, a Facebook, a Swiggy, and they wanted the same experience with the banks. So suddenly banks' competition moved from just other banks to big tech, to fintech, to food apps, to whatever, because if you take Kotak's numbers, 98% of our savings bank volumes goes through the mobile volumes. Right? So our customers in the mobile, and they're wanting the same experience when they go to the big tech.
How much that will be in terms of value?
In value terms, I think it would be around almost 60% or so. Right? So about 40-50% would still go in value terms to the branches, but from volume, it's about 98%.
Pretty huge.
Yeah, it's very huge. And ultimately in banking, it's about volumes. Right? So I think that you saw the whole movement to technology. Government had built digital infrastructure.
Right.
They gave you Aadhaar as an identification. We moved opening a savings account from 7 days to 3 minutes with 811. We found a solution. So I think the world has changed. For banks, it has changed even more. From a market perspective, if you look at the last 18 months, India has grown at about 6.5%, 7%, highest in the world. The whole world is looking to India. Our macros are stable. The 62% of our population is below the age of 30.
Right.
Where do you get such favorable demographics? They will have consumption, there will be demand, they will want loans, they will have aspirational lifestyle.
Right.
So I think opportunity is large. It depends upon what you want to do and how you want to do it. And this is where the change is happening. In fact, the theme of our last year's annual report was change, and this year it's accelerating change.
That's right.
We believe in banking, 2-3 trends are going to be very different. One, technology is going to play a key role.
Yeah.
You know, in financial services, technology in the good old days was a support. Now it is a partner. In future, it will be with business. Banks will be technology companies with banking products, is how I see it. Second, the whole focus has moved to customers. Traditionally, banks used to manufacture products, say there's a savings account, there's a current account, there's a loan, and then they used to use their sales forces to sell. Today, it has to be from the customer. What exactly does a customer want? And there are so many different types of customers. A 18-year-old versus a 25-year-old versus a 40-year-old versus a 60-year-old is very different. And you start looking at customer research and work the product backwards. Third, the entire journey has to be digital, right? On the click of a button through the mobile. So banking is beginning to change massively. So for that, what do you need to do? And I'll talk about Kotak.
Yeah.
So we said first and foremost, technology to the fore. So we got in a CTO from Milind from the US,
Yes.
who's completely changing the way the bank thinks and executes technology, right? Moving to platforms, moving to end, etc. Second, we got on board, we said customer has to be the centric focus.
Right.
Bhavnish from Amazon, who spent most of his life at Amazon, for focusing on customer centricity. His questions are always starting from the customer. Our questions are always product out. So we as a bank are changing and learning. Third, I think the whole area of talent has to change. We moved to hiring engineers. We will move from buy 100% to build at least up to 50% or so,
Right.
and move the technology. So you need a change in talent. You need a talent mix. You need people who can bring about change and transformation. The core of the banking business, which is low cost and stable deposits, doesn't change. I'm very clear.
Yeah.
A bank's strength is its deposit and a share of the low cost and stable deposits. That comes from consistent customer acquisition coverage. On the lending side that you talked about, I think there has been disruption by Fintech in the unsecured loan space and in the small ticket space, right? They're not there yet in the home loan space, loan against property, business banking, working capital. It's in the unsecured space. What have banks done? What were they doing? They were just offering a customer when they came in. Banks have massive data. We have about 4.5 crore customers.
Right.
We're simply qualifying the base and telling the customer, here is your personal loan if you want a credit card. The customer is interested, they have to just go click and it's in their account. So banks are moving on the lending side, right on the unsecured side, to data-based, deep science, technology-oriented delivery of the product. So if you look at our personal loan today, it's entirely digital end-to-end. Credit cards, digital end-to-end. Those are the products. If you look at what the Fintech is doing, it's about small ticket personal loans. That has really proliferated. So we have to move with times. I'd say India is a big opportunity. There's a youth opportunity. And we're very clear as Kotak. We have to bring the pillars of technology, customer centricity, talent, low cost and stable deposits as focus, and of course the lending, which is in the consumer space. We're very large in the consumer and commercial. Commercial is SME and MSME, etc. And we'll continue.
Talking about Fintech, which you have already, given your perspective, this is a time when fintechs are thriving like anything. I don't even have an industry estimate how many fintechs we have because there is no reliable information. All that we know is that they're thriving a lot in various formats. So from a Kotak's perspective, how do you look at the fintechs? Are they rivals to you, or will you approach a collaboration channel with fintechs going ahead? What is the strategy?
So let me just put it in a very simple perspective. Yeah. What are fintechs? They are a great experience layer. Yeah. And they take up any one problem solution and build a technology-based experience layer about it, right? What are banks? they have massive customers, and they are also moving forward on the experience layer.
Yeah.
Right? The most expensive part of a business is customer acquisition.
Right.
So fintechs, except for a few, are finding themselves that they're a great experience layer, but they have to work with banks or other financial entities to be able to stitch a business model.
Yeah.
So in my view, the entire space can thrive on a collaborative basis. Each brings their own strength. So a fintech brings the strength of an experience layer, which is important for our customers, and banks bring the customers. Having said that, in India, unlike in the rest of the world, banks have moved forward on the experience side significantly. If you look at the leading private sector banks, and that includes Kotak, they have all worked on their technology front end and moving the experience factor for their customers significantly by making investments. So I think it is about collaboration. So for example, any fintech who's in the data science and the analytics space will work with banks who have large consumer bases. Similarly, somebody who has a great account opening experience will work with banks because, the banking customers, they don't have the license, and so on and so forth. Some may enter into the space as distributors. Some may enter into the space as taking an NBFC and book. So I think it's an evolving landscape. Suffice to say, collaboration should be and will be the way to go.
You have always spoken about the future possibilities, the chances for Kotak to develop its franchise across India. You also mentioned that there is a lot of untapped market. What is the approach towards acquisitions? I can think of two microfinance companies you have done, BSS and Sonata. Sonata, I believe, still the final approvals are yet to come. Will you be continuing this acquisition channels of smaller companies? If I can ask you frankly, is acquiring a mid-sized bank a way that is one of the options before you?
So we are very fond at Kotak of saying, anything that is value accretive, Kotak will always be interested in. And if you look at BSS or Sonata, extremely value accretive. BSS was our way of entering the business, learning from it, scaling it, and we built a solid business over there. Sonata was just an extension of that. And both came at a great value, great set of people, and business models in different pockets. So it gave us distribution. So BSS and Sonata overlap is very less. So anything that's value accretive, Kotak will be interested in.
Will you be looking at a mid-sized bank in future?
If it is value accretive, we are always open, right? That's what we always say. Having said that, even at the organic level, India is so deep. If you just go beyond the metros and the urban itself, there is so much to penetrate. And if you look at tier 1, tier 2, tier 3 cities, they're all booming. And I think if the trickle-down impact of the economic growth happens, it is India's decade. I just hope that it plays out the way it is, in which case banking will be the center of it, because banking is very closely linked to economy. Economy grows, banking grows.
I'll come to the industry views a little later. About Kotak, a few more questions. This is a time very, like I said, Kotak has been doing pretty well. It is known to be an organization which won't take undue risks. But if you look at the Q1 numbers, I could see that, the unsecured retail portion has grown. Now it's constituted close to 11% compared to, I think 7.9 or something in the previous quarter. Is that a conscious strategy to grow the unsecured loan book now?
So you have to see from where we started. So just coming out of COVID, or let's say about 15, 18 months ago, our unsecured portfolio was less than 5%. I think it was 3.5 or so of our total portfolio. All other banks were around between 15 and 20%. What happened during COVID? All the marginal customers, loss-making customers, all got flushed out of the system. So the system was clean. What a great time to start working, building your unsecured portfolio. At the same time, the economy rebounded and consumption came back. So our strategy was very much in keeping with a much cleaner environment. Second, consumption pattern changing. Third, deep investment in data science and analytics on our own customer base. For example, in credit cards, 98% of our cards are to our existing customers, right? So we started a combination of all of this, and we moved from under 5%, we moved to 7%, we are now around 10%. And we have stated, even when we were below 5%, that we will look at up to the mid-teens. And that's our stated position. So if you look at the rest, there are many big players in the market who are 50 and 60% unsecured, right? Not banks, but non-banks. So we are very clear that mid-teens is what we will look at, and that includes microfinance, that includes cards, PL, etc.
Just to clarify, mid-teens, you meant the unsecured loan book?
Absolutely.
As
a part of our total asset portfolio, like I said, we started at below 5%.
Yeah.
We are now around 10%.
Around 10%.
And we have said that we will look at mid-teens, and for looking at what percentage of our total asset portfolio will be unsecured. That's not a bad ratio.
Right. But, what about, say, in good times, everybody is, very optimistic about the unsecured book. But isn't it a concern for you what will happen in bad times, because things can change?
So which is why it's very important, who are you doing this business with? If you focus on your own customers who are banking with you, who have transactions with you, it's a much better position than unknown customers coming from wherever, right? That risk always exists. What is the biggest risk of unsecured? If there are massive job losses, if the economy degrows and small businesses like hotels shut down, people lost their jobs. So I think it's economic risk. But then you have to see how balanced you are.
Yeah.
If your 100% of your portfolio is not going to go bad, right?
Obviously,
so if you are in, let's say, go up to the mid-teens on your portfolio, you will have to manage the risk. And that is why banks have very strong collection mechanisms.
Right.
You have strong monitoring mechanism. That's all a part of the risk management. Lastly, it's all about risk-adjusted return. Are you pricing the risk? One of the biggest pitfalls of the financial system is risk is not priced, and thus there are losses. The risk pricing has to be sufficient to cover your, expected loss, and that is how you have to price.
What is your, the stress level from the unsecured loan book so far? What is your experience?
So far, it has been very stable. The whole industry has been stable. Okay. I don't think it's just about Kotak. Yeah. I don't think as a banking industry, we have ever seen such a stable state. And that is why Uday has often said it in the last 1 year, Goldilocks kind of scenario, right?
Yes.
It is looking good, but I expect normalization to happen. And you're already seeing the normalization. It went from very low, and you will see the system normalizing from very low levels of credit. Yeah. But broadly, it is still stable because there is no signs of any job loss, stress, etc.
Yeah. So, as you were talking about the unsecured loan book, so you're one of the senior leaders of Kotak. You have seen all the cycles over the last decades. Say, if I ask you, what is the vision for Kotak, say, over the next 5 years or 10 years? Like I mentioned, there is a drastic change in the industry landscape. The focus of the big lenders are now mostly towards retail loans. People want to stay away from risky wholesale loans. An experience probably that is learned since 2013-14, and particularly after the AQR in 2015. Most of the large corporate NPAs have been now transferred either to the IBC or found some resolution mechanism. So going ahead, what is the vision for Kotak, from a lending perspective? Will you be focusing more on the retail side, or are you also open to fund large corporates?
So firstly, a bank doesn't just look at lending. A bank is a holistic strategy. We have about a 2% market share, deposits and advances, and we want to, growth ambitions are pretty high.
Yeah.
I told you the core of the bank is its liabilities, and low cost and stable liabilities will be the key focus. On the lending side, we are present in all three segments: wholesale, commercial, and consumer. Commercial and consumer forms a very large part of it.
Right.
It is actually the tougher part of the business. We will be present wherever there are opportunities. It is not as if banks are not lending to the wholesale side. I think firstly, demand itself is not very high because the capex cycle is still nascent in the wholesale side of the business. Right? They have all deleveraged their balance sheets and sitting on cash over the last few years. And thirdly, the pricing is very fine, right? So we also focus on the corporate side of the business and in various different segments. For example, infrastructure like renewable energy, data centers, they're all looking very interesting and opportunity, and you're seeing a lot of opportunity. We will continue to focus on the wholesale side with a very large focus on the transaction banking platform. That's which gives you the flows, which gives you the fees, and also helps you lend. But it's important to price and look at the kind of company that you'll deal with.
Right.
Commercial, which is SME and MSME, is a very key focus area for us.
Okay.
Kotak has always been strong in that, and we believe that when we work with SMEs, we really get full banking. We know the promoters, we know how to underwrite their risk, we try and capture that business. Consumer, in India, consumer will be a very large business as India per se. And for Kotak, we have always been focused on the consumer, and it will continue to be very large. Whether it's home loans, whether it's credit cards, whether it's personal loans, whether it's LAP, whether it's other products, I think the consumer focus will be very high. So we are even today focused on all three segments. We go by opportunity, risk, and pricing of the risk. That's the way I put it.
What is your outlook on the Indian banking industry as a whole? Because India is in a much better shape in terms of now asset quality and in terms of growth. But there are, US banks don't look good. We just saw a recent crisis in the US banking space. China, there is an emerging property crisis. Europe still looks weak. So till what point we can, ignore these external threats? Have you assessed, our future roadmap for Indian banking sector?
So if you look at the current scenario, I've said this, it has never been so good. If you look at the credit growth that banks have seen in the last 12 to 15 months, it's been unbelievable. You haven't seen it for a very long time. If you look at the NPA trends for the last 18 months, it's been unbelievable. Banks have capitalized themselves, right? So they're sitting on good capital, they're sitting on business, on low credit risk, good capitalization, and the opportunity. So I think the banking segment is well poised to take advantage of the growth in the economy.
Right.
What is key for the banking industry are a few factors. If the economy continues growing at 6.5%, 7% or more, we need more growth for India if you want to, lift the lives of the people. But if the economy continues to grow at 6.5%, 7%, banking sector will have a lot of opportunity. I don't think there's any dearth of capital seeking the sector, and there's no dearth of opportunities in the sector for lending. I think it will be very closely linked to the economy. You talked about the external sector. I think the risks there are firstly oil, because India depends on oil. What happens? If oil goes on boil, then you will have the currency factor and your inflation will pepper, because oil impacts everything. Second is obviously currency. If there's global volatility and if you import volatility through the currency, then again India could get impacted. India is oil dependent on its imports. Otherwise, it's pretty much self-sufficient on food. Our consumption and domestic economy is very much self-sufficient. Right. In fact, if you ask me, China factor could be an advantage for India. India, and I think our government and Prime Minister is already working on it. Increase manufacturing, use India as a manufacturing base, export more from India, opening up India. I think a lot of good measures have been taken by the government.
Right.
As I see it, closely linked to economy, sector has adequate capitalization and good balance sheets to leverage this. And if India continues to grow, nothing's stopping the banking sector.
I must ask, every boom period in Indian banking credit cycle has followed an NPA cycle. As we have seen in the past, post the GFC, we have seen credit growth picking up, and later we saw how the NPAs emerged. Which are the areas Indian banks need to be cautious about? As a senior banker, where do you see stress emerging, say, 3-4 years down later when it used to be?
Same that has been there for the last 5 cycles. Infra lending, right? So you've got to be careful about how you structure and price risk. Having said that, I think banks, the data, the science, and the mechanisms for credit support has changed, right? Unsecured retail, maybe. So I think it depends upon the cycle. If the cycle is such, if you see in the past, you've had a wholesale bust cycle, you've had a retail bust cycle. The retail bust cycle came from job losses post-Lehman. So if there's a massive, global event and sector goes down, people lose jobs, there will be a retail NPA cycle. Right. The wholesale cycle comes from a collapse in the economic growth, right? When demand falters and this thing. Right. So I think you've got to very closely read the tea leaves and be prepared for that close monitoring, taking timely action, moving very quickly, and then strong collections. But that is inevitable. A cycle, It is said that the worst mistakes are made in the best of times. Who knows where we will see the cycle?
Very well said. Well, that brings us to the end of this very interesting discussion. Thank you so much, ma'am, for joining us. Thank you to all viewers. We'll come back to you later.